Hello. 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 Can you guys hear me? Hello. May resume recording. Okay, so since everybody can now see my screen and hear me clearly, let us start off with what we have going into the new week. So good evening, good afternoon, good morning, wherever you're watching us from. Welcome to this week's Forex review with Great White FX for the 19th to 23rd of June 2023. So without taking so much of your time, let's get down to what we have for this week. So going into this new week, Thursday is going to be very interesting. We have lots of, we have Swiss National Bank monetary policy assessment on Thursday, and we have pound monetary policy, official bank rate and policy coming into the new week. And that's just the major rate news and some other high impact news. Monday is going to be a pretty quiet session on New York because I think they have a bank holiday. And that's just basically it going into the new week. So without taking too much of your time, let's get down into the charts and see what we have. So we're going to start off always with NASDAQ. We're going to start off always with NASDAQ. So let's look at what we have on NASDAQ. As we can see, basically NASDAQ, it's, if we look at NASDAQ from what this chart is just showing you is only the highs and the lows. It's not showing you anything else. It's not showing you anything else. It's just showing you only the highs and the low. It makes for better and easier analysis of your charts. And I'll suggest you also do the same thing. So if we can look at this, we can see that NASDAQ US 100 is basically making new highs. If we go to the 4 hour, we can see that it broke out of this consolidation and it's currently retracing. Then if we go to the 1 hour, for those of you who trade patterns, some kind of patterns, you can easily see it on this type of chart. This chart is just basically with a zigzag. I use the zigzag to do it. And then I switch the chart to, instead of candles, I have line charts. So the zigzag can easily show clearly. So what we can see now is that we have a breaker structure on the 1 hour. So we have a low, we have a high, we have a low, we have this higher high, and this neckline has been broken. So now if we go into our charts, we can also see that the NASDAQ on the monthly is coming, just touched this monthly fair value gap, and these almost equal highs here. Let me see if I can zoom in so that we can see clearly. Almost this like equal highs here. You just tapped it a little and retraced heavily on Friday. And also, if you notice, if you pick this dealing range from this high to this low here, price is at the upper 75% of that range. So price is now, like we can say, is in deep premium. So if we move down to the daily time frame, remember where price is now. Price is at premium levels and premium PDRs. So we can see that there has been a massive rejection on the daily. If we now look at price on the 4-hour time frame, you can then see that breaker setup, high, higher high, and then that break of the neckline. Let's go to the 1 hour so that you can see it clearly. So this is what we have now. So going into this new week, the order flow is still bullish. It's not yet bearish, but we have a sign on the 1 hour that there's a possibility we might start seeing a steep retracement on this pair. So going into this new week, you watch this fair value gap on the 1 hour, as the fair value gap is this point to this point. So you're watching for price to come in here and see what price does. But it doesn't mean that price is going to drop off, because the price delivery system can still decide to cause more pain by doing this. Maybe doing something like this, then finally deciding to drop. So it's not etched in stone that immediately this happens that it's going to drop. They might still decide to cause a little pain to those who have started selling early. So that's just what you have to bear in mind. So for now, we might see a retracement to the downside going into the new week. So what you'll be watching is for price to, all things being equal, if this plays out, this fair value gap here is supposed to hold price, cause a rejection, then we see price trying to fill up these imbalances here on the 1 hour. But if that does not, if this fails, then you see if price will come up towards 1525, that's this high, to give you a steeper retracement and a continuation lower. But if they don't close above this high, be rest assured that they might make a lower high. So you might see something like this, come up to this high, as at this point, something like this, then price may drop. So that's what we have going into Monday on NASDAQ. So NASDAQ is still bullish, but we might be looking at a bearish retracement into any of these imbalances here on the 1 hour. So the next pair we're going to be looking at is the dollar index. So we'll look at the dollar index also with this. Let's see what we have on the dollar index. So if we look at the dollar index on the daily, I see it's in a retracement. If we look at it on the 4 hour, we can basically say that it's in a down move. It's making new lows, no new highs. Liquidity here has been taken out. So basically, if we go back into the chart, it might be looking at 101.21. So let's go into the chart to see what we have on the dollar index. So we already have the narrative on the dollar index that this is looking bearish. So as we can see, the weekly has closed as a big bearish momentum handle. So if we go back now into the 4-hour time frame, let's look at it from a 4-hour time frame. Look at it from the 4-hour time frame. No, there's something I noticed. Let me pick up my notes, because I will have this written down. Let me pick up my notes. So if we look at it from the daily, if we look at this price action from the daily, we have this fair value gap on the daily. And then we have this down here. And then we have this unmitigated bullish order block here, as you can see. So this is basically what I think may happen. So let me note all this as that's a bullish order block with the fair value gap. Yes, we have it here. Then we also have a daily fair value gap here. So this is what we have here. So if this rallies first, because it depends on how they decide to deliver price, it should not drop. For it to continue lower, it must not drop first. It needs to go higher, feel this, and then continue to the downside. If it starts the week by dropping, then that means they are going to come into here. Because this other block is important. Why is this other block important? This was the last down candle before they broke this high. And that was what started the move up. So we can say this is a retracement into this area. So we'll watch to see what price does. But I'll prefer they don't drop first. I prefer the rally. So looking at the daily fair value gap, 102.66. If they become very aggressive, they might move up to fill up this 4 hour completely. Then you look for something like this to continue to the downside. Probably towards that daily or that fair value gap with another block or the daily or something lower. So for the dollar index, you're looking to sell into rallies. Looking to sell into rallies would be a better play going into the new week. So the next way we're going to be looking at is EURUSD. So let's look at the EURUSD. Well, on the 4 hour, I see that it's in a bullish run, has been in a bullish run, and they seem to have made a swing high. It seems to have made a swing high here. So the possibility exists that we might see a bit of a retracement before a continuation back to the upside. Just like I said on the dollar index, if the dollar index is to rally to fill up that imbalance, this is going to go down. So let's go into the EURUSD and see what we have on our chart. So on the 4-hour time frame, if we look at this on the 4-hour time frame, so price on the daily, maybe I didn't point this because I didn't pull up the daily time frame. Let me show you something on the daily. So this is where we have daily. On the daily, we can see we have what you call a mitigation block. A mitigation block is the opposite of a breaker, kind of like, because this second high did not take out 1.1095 before dropping. So if we look at where price is now on the daily chart, price is at that neckline. So that's where price is now. And if you look at this, we have a structure point here. So that's where price is now. So you do not want to be taking a long position here. It's not advisable. So even if we use our fib to find, we can see that price is deep in the premium level. So this may retrace. And if it retraces, where will it most likely go to? Let me look at the weekly to see if I have any area of interest. Well, on the weekly, it has filled up his fair value gap. As you can see, he has filled up the fair value gap on the weekly. So if it's to continue higher, we'll be looking at 1.1056 and 1.1095 if it's to continue higher. But for now, it's at a resistance, kind of like a resistance structure that might cause it to pause, retrace a bit, then before continuing back up towards this 1.1095 area. So for the EURUSD, we might see a retracement before a continuation back to the upside. Doesn't mean you can't take the shot. You can take the shot. Let's go to the 1 hour time frame and see what we have there. You can see we already have a breaker structure here on the 4 hour. On the 1 hour, it's not very clear. Not very, very clear. Not the cleanest. It's pretty ugly. So you wait for this to rally. If it doesn't take out this high, then you start taking your shots to fill in any of these imbalances or probably towards this fair value gap on the daily. That's any of these here before a continuation back to the upside. So the next pair we're going to be looking at is the GBPUSD. The GBPUSD has been very bullish. Very bullish. It's more, as you can see, we've broken 1.2680. So if we go to the 4 hour, what do we have on the 4 hour? It's still bullish. There's no retracement yet in play. So if we go to the chart, let's look at the chart. Let me hide my drawings. So we just look at the chart plainly. If we look at the chart on the weekly, we can see that the price is just coming into a weekly fair value gap. It has closed up this completely. So it's coming into this. And if you look at the left here, we have what what looks like a kind of a bearish order block, the last up candle before this massive drop. So price may try to close this. If it doesn't get rejected, it may try to close this before continuing back to the upside. But given that it just broke this high at 1.2683, it might retrace a bit before going back up. So it's at a level of significance that's deep in premium on the weekly time frame. Let me pick this high. Okay, I already have it here, so I just put it. And so you can see this is the 75 level. And the significant thing about this level is that slightly above this is a consequent encroachment of this fair value gap. So if we go down now to the weekly time frame, if we go down to the weekly time frame, I'm sorry, to the daily time frame, you see that price has closed it. So this may try to rally. It may try to rally. There is nothing much of an obstacle apart from this no significant old high or low. So if we drop down now to the 4-hour time frame or even the 1 hour, this may still rally. There's no sign of a breakout or a topping yet. So this may still try to rally. You know, we have rate news on this pair coming into this week. So this may still try to rally before it continues back, if there's going to be a retracement. But if you look at it, once you have a move below 27.68, as if you have something like this, maybe price breaks above there, breaks the low, goes below here, then you can start taking your shots from the second retracement. So that's what we have into GBPUSD. GBPUSD for now is still tilted to the upside. The next one we're going to be looking at is gold. Well, for now, I just can't see basically what gold wants to do. If we go into our swing charting, we can see that gold is just in a range, kind of like he has made a new low. This would have been deemed a little bullish if it swept all these lows and made a new high. But with all that momentum, it didn't make a new high. It didn't even sweep the liquidity. So that's reason for concern that this may still try to drop. Because if you look at it, it took out this low here, 1932.14. With all this momentum, it's supposed to have made a new high, but it didn't. Instead, it just swept liquidity here and went into a consolidation. So going into this new week, I believe they may try to fill this imbalance. After filling it, then we'd look to see what they do. But we never can tell. They might just do something like this, then take off. Then you wait for a retracement, then the move up would start. But for now, his move is not so clear. I feel he may still drop lower before moving back up. That's what I see on this pair. Because he didn't take buy-side liquidity. He didn't make a new high, obviously. So that's suspect for gold. The next one we're going to be looking at is EURGBP. Just like I said last week, this EURGBP has been basically on the downside. Basically on the downside. If we look at it from this, we can see that it's just going lower and lower, 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 lower. So going into this new week, we might see a bit of a retracement. Let's look at what price is on the weekly. See where price is on the weekly. Has taken out this low. Most times when price takes out a significant level, you might see a retracement. So I think it has done the retracement with this and closed back below that level. So that means that they may try to fill in this imbalance going into the new week. That's this bullish fair value gap. They may try to fill it up. So if we go to the daily time frame, we would notice that within that fair value gap on the daily, it's an unmitigated bullish order block. And why is that bullish order block important? It was used to break this high. This was the last down candle before they broke this high. So going into this new week, if there's going to be any buying pressure coming in, it's going to be at 84.87. 84, 87. So we wait to see if price comes in there, gives a bullish situation, then you might see something like this. So for this pair, like I said on the 4-hour time frame, it might retrace upside. It might retrace to the upside a bit. It might retrace to the upside a bit before continuing back down towards any of these levels here, as this pair is seriously still tilted to the downside. The next pair we're going to be looking at is GBPCHF. GBPCHF seems to have broken out of its range. Let's look at GBPCHF on this chart. We can see he's now making new highs. And see this massive consolidation here. You see the expansion, retracement, and the steady move. Liquidity here has been taken. This basically looking like equal highs here. Price has taken it. So his next target is going to be this cluster level here. So on the GBPCHF, you'll be looking to buy into retracements for this pair. And so we have that here on the, for all this volume imbalance here. You'll be waiting for price to drop in there, give you a bullish evidence. Then if you take the run, you'll be targeting 1547. Let me see if there's something between that price level, because sometimes if there's something between that price level, it may pause it. So basically not much. So we have this high, and if it becomes very, very energetic, it might go for 1577. So these are the obvious 2 points on this pair going into the new week. So this pair is bullish. You'll be looking to buy into retracements. Be looking for bullish evidence to continue, but I believe it might retrace a bit, because if you look at this, price was efficiently delivered. So it might come down to any of these two levels. So let me note it here for you. Have here and this point here. So either of these levels is here you wait to see if price will come in here, give you bullish evidence, and then a continuation back to the upside. So that's going to be fair value gap on the 1 hour time frame. Let me get rid of this so I can use this to basically identify it. So that it might also help me. You have this. And we have this here. Then we have basically this. So these are the levels that you'll be waiting for price to retrace a bit to, then give you bullish evidence, then continuation back to the upside. So the next one we're going to be looking at is the yen basket, the yen pairs. Looking at the yen pairs, I basically don't know what their intention is, because I have run out of data on my time frames. I don't have any other set of data on this. So, and this is still tilted heavily to the downside. It has swept this low here, that is 70.73. Even if I pull up the Nikkei, because if the Nikkei is bullish, you have yen weakness. That's the irony of this, because since this is a Japanese index, you'll expect that as it is moving up, the yen should be showing strength. Well, it's the reverse. It's inversely correlated. So as long as this is going up, you have yen weakness. So, and if I look at this on the monthly, it's in what you call uncharted territories. I don't seem to have any new data here. I don't have any new data of any sorts. Let me see if I use a higher monthly, 3 months. I'm not seeing any new data. Let me use 6 months. See if there's something here. I don't seem to see anything. So that's just the situation I have at the moment. So we'll just basically use the yen pairs themselves because they still have data. So go to weekly. So if we look at the the pound yen on the weekly time frame. No, you won't see it on the weekly. What I want to show you is on the monthly. Okay, so if we look at it now on the monthly, let's go to this setup here so that you can see what I want to show you on the monthly clearly. The pattern appears clearly here. So if we look at this, price is coming into a breaker. High, low, higher, high, and then a breakdown. That's where price is now. So, but this is still bullish. So I'm of the opinion they may try to fill in this fair value gap before going, if they will turn. But if you notice, the moment price broke this neckline, it hasn't come back to this place. This is 2015, and it broke it in 2016, and it has not come back to that level until now. So, and if you notice, for consecutively like 1, 2, 3, 4, 5, 6, since the beginning of this year, the yen has been bullish. So you can see one-way movement, no single retracement. So if it fails at this level, then we're going to see the retracement. Because even if you look at this, we have this what looks like a bullish, bearish order block before this down move. So that's where price has come into. Price has come into the open price and it's within the body. So going into the new week, for the yen pairs, you'll be watching to see if you get the bearish evidence here. If you get the bearish evidence here, then you can take a short position. Because even if you look at the daily, we have this fair value gap here. The price has not fully mitigated. There's still a little part of it left. And even if you look at it, you can see there's still a little part of it here, and we have a resistance structure, bearish order block kind of structure here, last up candle before this down. So the price may try to close this up, then see if it will continue higher or if it might just give the retracement, because there's no sign yet of a retracement. Even if you go to your 4-hour time frame, there's no sign yet of a retracement. Let me go to the 4-hour. There's no sign of a retracement. So what would the sign of a retracement look like? Maybe something like this, then a break of a neckline, then that will set it off. So until you see this, you'll be safer buying dips on this pair. Until you see this, you'll be safer buying dips on this pair. So the last but not the least is Euro Yen. Let's look at the Euro Yen from the monthly. If we look at the Euro Yen from the monthly, it's almost the same thing. Price is coming into the breaker that started the decline. Price is coming into the breaker. If you go into this place again, you see clearly here. You can see it high, low, higher, high, break. No, sorry, it's here. You can see it's clearly a breaker. And if you look at where price is, that's where price is now. So this, the possibility that this may try to fill up this imbalance is still there. The possibility that it might try to run this imbalance a little bit higher is still there. So if we go down to the weekly time frame, what do we have? Let's see. Well, let's see where's price on the weekly. Well, price is at a bearish situation. Price is at a bearish situation. That's the last up candle before this massive move. So we have this fair value gap here on the weekly. So if this does not reject price, then you may see price rally up into this area. Rally up into here, then the retracement may happen. So for this pair, there's no sign yet. So this might still basically rally up. It might still basically rally up. So this pair is still bullish. You'll be safer without any bearish evidence looking to buy into dips. Looking to buy into dips. Let's go to scroll back a little bit, see if there's any area here. Well, Well, on the daily, we have something interesting here. We have the upper end of the bearish order block. It had a fair value gap. You see all this up candle before this down move. So this is where price is now. So we have this area here. So you'll be watching to see what price does between 155.90 to 156.98. If it rallies into it first and gets rejected, then you can take a shot. But if it drops first, then you know it's going to test any of these fair value gaps, then you can take a long position into that area. So that's basically what we have. Any questions? Any questions? Anybody want me to look at before we call it a day? Hello?
Yeah, we'll see here. I don't have any questions.
Okay. Controller, any questions? Anybody with any other question? So basically we're watching this area to see what price does. But if it breaks above it, then you'll be looking at this other area as an area for price to react from. Any questions, ma?
It's about the gold. So does it mean we'll have to wait and see what gold will do?
Let me just visit gold a little now, briefly before my time runs out. So looking at gold now, this is what you're going to wait for. To see if it will break here. You get, if you notice, it's not closing below this low. If you notice, it's not closing below this low. So although he has spiked it, so well, he's dicey. If I'll be honest with you, he's not clear. He's dicey. But I still believe he may still rally, but I can't say. Don't worry, within the week I'll update. Let's see what they do on Monday. Let's find out what they do on Monday. What they do on Monday will determine their game plan. Because if you notice on the 1 hour, although it spiked this level, it didn't close below it. So let's see what they do on Monday. Let's see if they give a bullish formation here, then you can take a long targeting this high and all this liquidity here. Because they are silent, it's silently being done. You will see it on the line chart. Can you see it? Hello, Ma, are you there?
I'm here.
So
it's giving us a W formation.
Yes, a W formation that has taken liquidity. So what you need to wait for Monday is this. That's just what you need to wait for Monday. Let them close above 15.59 on the 1 hour at least. Then wait for the retracement into, because once that happens, this place will now become a bullish order block. You get it will now become a bullish order block. Then you can take your long. Okay, so I think that ends it for today. Thank you all for taking your time to attend. The recording will be on the YouTube channel, so don't forget to like and share. It goes a long way. So good day, everybody, and I wish you all a beautiful weekend and a blessed trading week ahead. Goodbye, everybody.